I've always been interested in railroad stocks for many good reasons. And I used to own many of railroad stocks, especially Union Pacific, ticker symbol UNP, and then I sold it when it got too expensive. And this is one of the mistakes that I make in the stock market is I treat every stock like a cigar butt. Some stocks are just compounders. They can keep earning returns for a very long time, kind of like CSX and many other, railroad stocks and many other compounders. So the whole thing with those compounders is whenever you get them at a fair price, and if they keep growing, they keep earnings, high returns on capital, you have to keep them and not really sell them if they get overpriced. And this is some mistakes I made, with railroad stocks in the past, but now they are starting to get very interesting again. Now you may ask, why would you like something like railroad stocks? Why were railroad stocks such amazing compounders for hundreds of years? And the main reason for that is they cannot be disturbed by technology. We will always have rail, and rail is very important for transportation. It's much cheaper than just using trucks and stuff like that. And those railroads in the United States, they own the rail, so nobody is really gonna go and build a new kind of rail to compete with them. Now some of them are interconnected and they're pretty close to each other's, but most of them have some type of a moat in a certain area where if you need something shipped in a certain area, you have to go through a name, for example, like CSX to get the goods shipped, and it's much cheaper than doing it on trucks. And this is how really they were able to get such amazing returns and such amazing compounding for years and years to come. Many people are worried about the raises that some of the employees are getting in terms of the union strikes and stuff. I believe President Biden said a 24% raise, but in my opinion, these type of companies have enough pricing power that they could just pass it on to the consumer because they are needed. I mean, they're not gonna say, oh no, we're not gonna use rail anymore, we're gonna use trucks. I don't really believe this is going to happen. And rail is always going to be here, 10 years from now, 20 years from now, even 50 years from now. I believe people would still be using, railroads and stuff. So the whole thing with CSX, they kind of operate in this area in the United States. They have a competitor, which I believe is Norfolk Southern, if I'm not mistaken. But mostly they have this type of, monopoly in terms of those areas in the United States, which is, again, something pretty nice with the company. And if you compare it to other railroad stocks like NSC, which is Norfolk Southern, and UNP, Union Pacific, which is stocks that I used to own before, it's pretty much the cheapest between all of them. It's sitting around 16 times earnings. The others are 18 to 19 times earnings. And on a forward PE basis, this stock is only trading at a 15 times earnings. But again, even their gross margins and their profit margins are pretty close to each other's, but CSX is trading the cheapest. Now, many of you would think that if it's just trading the cheapest between all of them, and it's railroad stocks, they're going to be here forever and stuff like that, this could be an amazing buying opportunity. But actually, it could actually also be a value trap, and this is why I'm not buying CSX right now. I have it on my watch list. It's an amazing company, not just CSX, but also UNP, and those type of railroad stocks, as I'm looking for some type of compounders in my portfolio where they can keep raising prices, steadily growing over the years, and they're going to be here forever. The technology cannot disturb their business models. All right. Now, this is what happened in 2008. If you go back to 2008 recession, their earnings fell, I believe, around 19.7%. So around 20% their revenue fell from 2008 to 2009. Now, you may ask, why would such a thing happen? I mean, people kept using rail in this period. So why did this whole thing happen? Well, because railroads like CSX and many other railroads, they do have a lot of exposure to kind of really cyclical type of models. For example, like automotive, it's 7%. This is going to slow down in a recession. Same thing with chemicals, especially same thing with metal and equipment, same thing with, mineral and some fertilizers. Same thing with, other kind of merchandises that this CSX actually does, and many other railroads too. So those shipping with autos and stuff, and UNP has a big exposure to autos, those type of things, they slow down in the recession, and it also causes the shipping rates to go down, and it really causes, CSX's revenue to go down, which is crashed over 20%. And I believe we could see something pretty close with CSX and other railroad stocks happening. Therefore, if you look at their all-time kind of PE ratio trend, now it's sitting around 16.5. The mean, it was 16, but if you go back to 2008, the stock fell to a low of, I believe, around 6 times earnings. Now that's pretty low, and now it's sitting at 16 times earning. And if we do see something like 2008 and 2023, I'm not saying a financial crisis, but I'm saying demand destruction from inflation and higher interest rates and many other things, which is very likely to actually happen. CSX is gonna suffer from lower volumes, the shipping rates are gonna go down, and then the P ratio is not as cheap as it actually is. So therefore, I believe CSX is a value trap. I think it's an unpopular opinion, as many people like this name. I like this name too, but I would not be comfortable buying CSX right now at this 16 times earnings, although it looks cheap. It traded as high as 30, but I would not feel comfortable buying it right now. Seeing what happened before in 2008 and seeing the exposures they have, which is over 60% to merchandises, which actually slows down in an economic slowdown or a recession, and therefore their revenue is going to be affected. So I'm holding on CSX right now, and if it gets too cheap to ignore, I don't know, maybe under $20 or $20 or somewhere close to a 10 times earnings, I think this would be an amazing opportunity to buy and hold for a long time, as railroads are always going to be with us. So this is my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.